The wheel strategy can be a trap for a lot of people. Although I find the wheel strategy works really well, especially at the beginning as you get started. Many times the market continues to head higher and you can go ahead and buy shares of stock and then sell the call above it in order to sell those stocks at higher prices. And if it doesn't work, just keep selling the calls. That does technically work in many cases and situations. However, sometimes stocks get a little bit too high, and that's when things fall apart. And this is where sometimes the wheel strategy doesn't work for some people. They kind of get out of it or bail out of it early. But here, I'm not going to give you a whole list of things that you might be doing wrong. In fact, I just want to open up your eyes to the fact of how to do the wheel strategy better in different market conditions. Now, if you don't know me, I'm Sasha, the options coach. I've been teaching people to trade options over the last decade. And in that time frame, doing things from one-on-one to classes and even writing some books. Now, one of the issues with the wheel strategy is that many times it's done so with a bullish mindset, meaning assuming stocks go up. However, when I work with people one-on-one, as we progress and as we get deeper into the subject, once people understand the wheel strategy, especially as you start doing the wheel on 3 or 4 positions, what typically happens is the portfolio concentration tends to be all bullish. And the problem with it being all bullish is now you've got directional risk or single directional risk. And this is what creates some issues for a lot of people, is because now you're positioned one way, just like everybody else. And this is where recently I've just done a class on it, on the reverse wheel strategy. Now, the reverse wheel strategy is opposite of the wheel. In the market, if you think about it, there's always what you've got and then the opposite of that. So if you're thinking there's something to buy, there's also something to sell. If there's something to sell, there's something to buy. If you've got selling an iron condor, you've got buying an iron condor. If you've got broken wing butterflies, you got balanced butterflies. So there's always something. And when it comes to the wheel strategy, it's no different. You have the regular wheel strategy or the standard wheel, but then there's also the reverse wheel. And the way that this works and operates is a little bit different than what some people think, but the risk profile picture is very similar, except it's mirror image. So here's an example of Costco. And what we've got is we are first selling 100 shares first, okay, at 905. And we're looking to buy those shares back by selling a put at 900. Trying to create a $5 move, right? If we buy something at 900, but we already sold it at 905, we get that $5.60 move plus the premium. So this is where the reverse wheel is really interesting in that it creates negative delta in that portfolio. See, when a lot of people go in and they do the wheel strategy, you might go in and say, okay, I want to do the wheel strategy. Yeah, it sounds good. It sounds great. But here's a little bit of the issue with that, is that when we do something like this is we go in and we say, okay, I want to do the wheel on, let's say, NVDA. Okay, so I've got one stock. I'm looking for the upside. Now I want to do it on ExxonMobil, also to the upside. I want to do it on Shopify. Now you're wheeling a few stocks and positions. It could be on CVNA and then Tesla. And now you've got all of these positions, but what they're doing is you're wheeling them all into the bullish sphere, meaning you've got positive deltas. So if you bought 100 shares and then you sell, let's just say a 30 delta call against it, you're kind of adding about 70 delta a piece. Okay, so each position is creating 70 delta. So if we've got 1, 2, 3, 4, 5 positions, 5 times 7, you've got about 350 deltas. And they're not all equal because Tesla deltas are not as, the same as ExxonMobil deltas because it's much more stronger. It moves and whips a lot faster. So you've got a lot of deltas that's very bullish. Now, if we can go in and do something opposite and we can do the reverse wheel, meaning we are selling 100 shares of stock first, then we sell the put in order to buy those shares at a lower price, it allows us to have negative deltas, which is what I've got over here with Costco. I've got some negative deltas. I've also got the same thing with Amazon here. Let's pull that up, Amazon. Okay, so also I've sold 100 shares, you can see, and I've sold the put to get it at 192.50. It is not there yet, it's at 193, but Still, the principle is the same. If the stock keeps going down, this will be good for the position. But what this allows me to do is now create a couple of positions. Maybe I want to go in and do a second, a different position. Let's call it position number 6, 7, and 8. Okay, and this could be on Adobe. It could be on Netflix. And maybe let's say team, just because that comes to my mind. And now we've got a negative position where I short or sell 100 shares of each and maybe buy a put at about, again, a 30 delta. But now this gives me a negative 70 delta on each one. So what it does is trim down this total delta that I have from all the bullish positions. Now, I don't have to have all of these positions be bullish or be bearish. I can have a mix or concentration of risk. So if you think of this like a cup of water, or just like a glass that you're trying to fill up all the way to the top, or 100% use, I could have a few of these be bearish. So this could be my bearish or covered, my covered puts, which is the reverse wheel, and then the other part over here would be the normal covered calls wheel part. Okay, so I could have a concentration something like this, or I could do a different concentration where I could have it be more balanced. So I could have half of it be, bullish and half of it be bearish, or a different concentration where I could have, let's say, a larger amount be bearish and a very tiny amount be bullish. So your concentration will be different depending on what you want. But what you have to recognize is that you're kind of doing more of a seesaw effect of balance. So here's kind of like the seesaw effect, is how much bullish versus bearish positions do you want to have? Okay, so do I want to stack maybe 4 bullish and just 2 bearish? Or do I want a lot heavier of a bullish concentration? Or maybe you want it quite the opposite. You want a lot of bearish positions or a larger bearish concentration of risk, and then very few bullish positions. And that's the beauty behind it, is that the wheel strategy, you might think, hey, I'm ready to do the wheel strategy. I've got it going on. And yeah, you've got the skill sets. But remember, when you're looking at a portfolio and as you start integrating more capital in there, there is the reverse wheel that you could be doing, because it really doesn't matter if you sell first and buy the stock back later. Yes, this has some inherent risks to it, and you are short a position. You do require some additional brokerage or margin privileges. But nevertheless, the risk is not anything too crazy that you might have on a stock as well to the upside. Now, we cover a lot more risks of this in this class, and that's kind of what we're doing right now, is I'm going in more depth with this class that we've got, because we've got a lot of classes here that I've done recently. Anyway, the point being is that these things here allow you to make money from the downside instead of just doing a standard wheel. And now you're able to do a better concentration on your portfolio. So if you're kind of struggling with the wheel and you are only doing the wheel strategy, especially if you're doing more than 3 or 4 positions, you can start looking at the reverse wheel or covered puts, because it gives you another variety. Don't get stuck in this box thinking you only have to do the wheel strategy. Open up your mind and see what's out there. Anyways, these are the types of classes that we do. It's a lot of knowledge and information that we go into, sometimes multiple days long. If you're interested in serious, let me know. Reach out on our website, send me a note, send me a comment. And, the best way, of course, is reaching out through the website, because that's where we can actually book a quick chat together and give you some choices of what's the best fit for you as a learning path moving forward. Anyways, hope that helps. It gives you a little insight on the wheel strategy. And if you're struggling with it lately and it kind of gives you a little bit of a sour taste in your mouth, it may be that you just need another tool in your toolbox. You don't need a ton of tools. You don't need to maybe go into iron condors and all these other crazy strategies right away, unless you want to. But if you want to stay in the wheelhouse for doing the wheel strategy, this now gives you an opportunity to really understanding the wheel strategy and what you're doing beyond just the basics of the wheel, beyond just the normal wheel. Now you can rotate that wheel not just one way, but also the other way. And that's where the power lies in the wheel strategy. It's not just doing it the simple one way that you might have learned. Anyways, hope that helps. reach out to me if you have questions. Check out our website. Tons of classes that we do. Hope to hear from you. And other than that, enjoy some of the free videos that we've got, free training, getting started guides, much more. It's all on the website. I'll see you next time. Take care.